Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do a lot of work, including these free mentoring roundtables every week. This is the 554th session. We started doing these back in 2008 fall and have continued to be here most weeks in the year. Maybe out of the 52 weeks, we're probably here at least, 45 to 48 weeks. Especially in COVID, we have hardly had any break. The event is being recorded. Every single recording is available on our YouTube channel, 1M Roundtable. And you can join us on Twitter at 1Mby1M or at Romana. And our hashtag today for live tweeting is 1M1M. This is a roundtable, not a broadcast. We want you to participate as much as you would like to. So this is all available for you to call into and discuss. So throughout the session today, you will have the public chat available to you to comment on or ask questions, and also I will open up the line for bidirectional dialogue through the audio bridge. Your computer, by the way, also allows you to dial into the call with audio. Today, we're going to start the session with a conversation with Deepak Gupta, founding partner at WEH Ventures. Deepak is joining us from Mumbai, India. Welcome, Deepak. Great to have you here.
Yes, thank you.
So, Deepak, tell us a bit about yourself as well as WEH Ventures. This is the first time 1 million by 1 million is meeting you. So we're eager to find out more about your investment thesis.
Yeah, so basically, I guess I have been part of the venture ecosystem since the last 20 years, so not continuously, off and on. And then in the last 6 or 7 years in the early stage in India, I run a fund called WEH Ventures. We are now on to our second fund as of last year. We do pre-seed to seed investments, which are primarily focused on the Indian market. We have a few which are companies facing overseas but predicated based in India. And we are fairly sector agnostic. I mean, that's a brief introduction. I guess now we are somewhat well known in the market. I've had some early success in the last few years. So,
how big is the fund?
Our fund is almost exactly $1 billion, so a little under $15 million. So it is very much a micro sort of VC fund. Yeah.
And what size checks do you write?
So we write checks of anywhere from, I would say, $150,000 to $400,000 to start with.
Okay.
And we are slightly more concentrated, so we would do maybe 15 odd deals from the fund, and therefore we have a decent reserve for at least 1 or 2 follow-on rounds.
So you participate in the follow-ons as well. And you said you do pre-seed to seed, which is consistent with your check sizes. Now, what do you look for in the deals that you choose to invest in? How do you've had quite a bit of success. So what characteristics have you determined that you are ready to write a check?
So I think, it's pretty common, I guess. Every investor has slightly different weightages of certain things. I think we operate in a very lean team, and the 2 partners, and basically we are fairly intuitive in the way we choose to do business. So with the company. I think primarily I would say the majority of the decision, perhaps 50% or more, is the founder, and the remaining big chunk is sort of the market or what it can be. And then there are at times when there is a little bit of market traction and things like that, which obviously helps to take into account. What we try to avoid generally is to take cues from other investors in terms of whether X or Y investor is investing or not. So we try to keep our decision fairly independent, and typically we don't want to know who else is there until we've sort of made up our mind. And I think that has also helped us in having a little more conviction when we enter. And yes, it's very simple. I mean, and there are certain times, I guess, you need certain founders where.
Deepak, talk about some of your favorite deals and kind of walk us through in what stage did you encounter this company, the entrepreneur? What did you see in the entrepreneur or the company or the market that really attracted you and made you want to write the check? So let's do maybe 2 or 3 case studies.
Yeah. Let me tell you. So, for example, we have invested in one of the companies we've invested in from our first fund. It's a company called Small Case. And when we looked at them, and this was about 3 years back, 3.5 years back, they had received a small pre-seed check in those days, and they were having, I would say, a little bit of difficulty perhaps attracting capital for the next round. This company essentially was creating baskets of stocks in a passive investing model, a bit like Motive used to do in the US, but the Indian market is and was very different. There was hardly any ETF-like product, and a lot of the fintech investment sort of startups were basically hawking advice on which mutual fund to select. And the participation in the funds was also low and has grown since then. So they were finding some really good success, this company, and their product was very beautiful. And in fact, we stumbled upon them because more keen initially to invest in companies which were similar to Accounts and others, more like savings apps at that time. But somehow we stumbled upon them, and they had an awesome product. They were creating these baskets of stocks through one broker. And as we saw it, within about a week or so, by the second meeting, we said we have to invest in this company. And it ended up being like an in-between round at that time, like a bridge round. And since then, they've raised multiple rounds of funding, and top-tier investors have come in right after we came in. And some of the concerns, I guess, in the minds of institutional investors at that time were that they were attached to only one broker's platform, and they were only a tool for very sort of knowledgeable investors and not a massy tool. And all those have been sort of cast aside to a large degree. They are a mainstream product. Everybody in the Indian sort of financial market knows about them, wants to work with them. They work with almost all the brokers. They have fairly sizable AUM now. And so again, that was like a high conviction thing where we reached out to them while researching around their sector, not necessarily knowing about them upfront. And then when we kind of liked it, we moved quickly to sort of give them our commitment. And of course, even that bridge round turned out to be larger than perhaps was envisaged at that point, because some more interest came in from more established investors. And then we backed them for, I think, all the rounds so far, so about 4 rounds.
Okay.
And we've done this again and again with other companies. So despite not having a huge amount of capital, I think we've tried to sort of, wherever we've had conviction, we've not backed off. And so we've ended up doing 3 to 4 rounds in quite a few companies now.
Is fintech a
and that has
particular
really helped us.
is fintech an area of particular interest for your fund?
So I would say there are 3 or 4 areas where we've sort of done more work. One of them is the whole Indian content space, which began to take shape around 2016, 17, where most Indians actually consume content in their own language. And over time, it is mostly video. So YouTube is like the biggest platform. And that wave started around 2015, 16. And we took some early bets then and have continued to do that. And we've now gotten into gaming. So that's one big piece. The other big piece where we have played is initially we started doing some brands, DTC brands, direct to consumer, because around 3 or 4 years back, that was just about beginning to get some legs in India. Over time, it has become a broader commerce strategy because commerce has just exploded around the world and in India, emerging markets during COVID. So we've done 2 or 3 sort of non-brand commerce plays in enablers and things like that. The third sector we played in with some frequency is fintech in general. So we've done small case. From a second fund, we did a company called JAR, which is also sort of in a broader related space of savings. They focus more on the middle India in a very simple interface. So we've done some of that. And then we have other sectors, like we've done something in livestock called Animal, which is not necessarily based on an ab initio thesis, but India is the biggest livestock market in the world, and they're solving a very big problem. So we are not completely thesis driven. I would say it's half and half. Half of it is either, I would say big thesis, but sort of themes or ideas we pick up and sort of chew through and then find something interesting. And half of it is just things that spring up which are exciting and we like them and move quickly.
One of the trends that we see in the Indian small funds is that some of them are exiting their investments into the Series C or Series D into other venture funds. Is that something you are doing? What is your point of view on that style of investing?
Yeah, I mean, that's certainly a path for us because if we don't, unless we keep investing substantially, in the later rounds, it sometimes doesn't make sense to keep holding a position because you do get diluted. Also, we have raised funds, many of us and our ilk have raised funds from domestic investors who have typically had a slightly shorter life cycle view on investments, and that is getting gradually sort of lengthened. So we also I would say subscribe to that. I think the other thing, of course, is that the M&A market in India for the longest time has been quite limited. I would say only in the last 2 or 3 years that some of the bigger startups and now even the incumbents like the Tata Group and other FMCG companies, etc., have begun to actively do M&As with some decent value. So 5 years ago, I don't think there was much M&A happening in any case.
No, the time to exit.
The route was just secondary.
Yeah.
So so we do subscribe to that. This is part of our strategy of exiting, of course, unless we all wait for IPO and things like that, which takes some longer time, typically.
Okay. Deepak, can you share with us a little bit of your overview analysis of the Indian startup ecosystem? You have been off and on, but you have been playing at it for 20 years. How do you synthesize the evolution of the market?
No, so I think if you ask me, even 5-6 years back, would we be where we are today? I could not have contemplated it to that extent. And I think there are 2-3 vectors. Like if you see the quality of the founders, and the quality, I by that I don't mean just their inherent quality, but the speed at which they can acquire the skill sets and the networks. Especially in markets like Bangalore and the Delhi region, etc., which are deeper sort of startup markets, and therefore start executing at a very high level very quickly, was never the case. I mean, in the early 2000s, the companies that used to raise venture capital in a very small Indian market were essentially nearly profitable quasi-IP and services companies, which would typically need maybe one injection of capital and then would go IPO, for a few $100 million. And that was probably slightly different from the US, but not too different. And now, of course, it's very different. The other is, of course, the depth of the Indian market. These so-called consumer internet plays. I think when I first looked at the internet subscribers in India early in my career, it was something of the order of 4 million. And now it's like 700-800 million. So that nobody imagined that happened only 2016 onwards with the telecom sort of geo revolution. Right. And of course now the third wave, which is Indian founders sort of directly jumping into global markets, or not, very soon from founding, having a global play in mind and having the confidence to sort of make a dent there. So I think those are the good things. What is still developing, I guess, is the capital market part, the M&A market. The IPO market has obviously seen some legs over the last 12 months or so, but I think we'll have to wait for it to season out a little bit. But all showing positive trends. So yeah, I mean, one could not have imagined, and I would think over the next 10-15 years, this will only get bigger, right? So, so I think it's a good time. Of course, some people say it's a bubble, etc. I think it might be from a 1 or 2 year lens perspective, but over a decade, it does sound like, there's so much depth building in this market that it is one of the frontier sort of venture markets in the world for sure.
Definitely. And I think, what you said earlier about the kind of investments that you do, the early pre-seed, seed investment with a small fund, this is a very important piece of the ecosystem, right? There is a lot of these bigger funds, the brand name funds from Silicon Valley have all set up shop in India and so forth, but this is a stage that they don't do. So it's a very important piece of the ecosystem where the fact that we are seeing this bridging of the long exit cycle with some exits into follow-on venture rounds and so forth are creative ways of addressing the issues. So, for entrepreneurs who are listening to this, I would kind of synthesize this conversation by saying that India is a very robust market right now and a very high potential market, right? The 700-800 million internet consumers is an incredibly attractive population of customers, but that customer base, a large piece of that customer base is extremely frugal. Their wallet size is very low, so to get wallet share in that market, you really need to have something very compelling, and you need to understand the nuances of that. On the investor side, investors are interested in those markets. In the beginning, the first part of the Indian venture ecosystem, we saw only the first maybe 100 million affluent customer base as the target audience. Now that audience has broadened, but the next phase of that audience needs a different way of servicing. So these are the trends that you may want to look at and how your venture, your idea fits into that trend is going to determine whether you can achieve investor-entrepreneur fit or not. We stress a lot on investor-entrepreneur fit. And in the case of WEH Ventures and Deepak, what he's saying is that he is willing to write those early checks. And that's a very unique set of investors who are writing these very early checks. And, you know, either you bootstrap or you connect with somebody like Deepak who's willing to write those pre-seed checks. So, and that has its nuances. And so one of the nuances that you should be aware of is if it takes long for your venture to get to exit, then one way to mitigate that circumstance is by having your pre-seed seed investors exit into the Series C, Series D investors. And that's a fine path of kind of dividing your venture journey. Instead of going from 0 to 100 million in 5 to 7 years with one set of VCs, you could split that up into two parts, where you go from, let's say, 0 to maybe 10 million with one set of investors and then have them exit into the next phase of investors. Did I summarize that well, Deepak? Do you want to add to it?
Yes, you did, you know, but the thing is the pace of value creation is, at least at the moment, much faster than that. You know, we have had companies hitting the unicorn status within 2
6
years,
months.
3 years now on a regular cadence
The
even
latest
in
one
India.
is 6 months, yes.
Yeah, so you know, it's not that people like us, I mean, we are not, I mean, our ideal exit is something that returns our fund more than 1x, right? Sometimes 2, 3, 4x or more. So that's not going to happen at 50 or 100. Of course, we'll take those exits, but we do feel that, you know, they will happen at 500 million, a billion, or even 1.5 billion within 4 to 5 years. It's quite
But
feasible.
not everybody or not all entrepreneurs in India are going to become unicorns. See, our audience is a much broader body of entrepreneurs, right? So our mission is 1 million by 1 million. So, I mean, how many unicorns are going to happen? In the world today, there are about 1,000 unicorns.
That is true. That is true. But, you know, I would think in a year or so, it is quite possible for us that from a very small portfolio of, say, 20 odd companies, which we would accumulate over the last, so we don't invest at a very rapid rate. We might have 1, maybe 2 unicorns out of that.
Yes, of course.
And of course, it may not happen, but I'm saying it's not implausible the way things are at the moment.
Not at all. But even if you have 1 or 2 unicorns, you have another 18 companies that you will need to find exits for, and
sure. Of course,
that's where having a mitigated strategy.
Absolutely.
Good.
Yeah.
Okay.
They are also valuable, of course.
Yeah, yep. Exactly. And for the entrepreneur gets one shot. An investor has a portfolio. Entrepreneur gets one shot. So the entrepreneur has to find a success in one shot. So that's
Absolutely.
why all those other strategies are also important and relevant.
Of course. Absolutely.
All right, Deepak, thank you very much for coming today. Very nice to meet you, and hope we will have a chance to work together from our portfolio to yours.
Yeah, thank you. Thank you for inviting me.
You're very welcome. Folks,
all right.
We are going to spend some time today on an article that I just published this week, How to Teach Technology Entrepreneurship Using the 1M1M methodology and case studies. So we have been interacting with a lot of people who are in some form or the other teaching entrepreneurship. Some are mentoring, some are professors at different universities and colleges who are trying to teach entrepreneurship and so on. And this body of work that I have published is to help that population of entrepreneurship educators. So I'm going to go over this material today with you and answer questions. One of the philosophical elements that I am tackling in here is, learning is going from a sage-on-stage model to a guide-on-side model. So the first, probably most prominent example of this came out of Khan Academy some years back. And it still continues to be a very major player in the K-12 education space, where they produce a lot of online learning content, and teachers all around the world are using this content to teach. Now, the material that I'm going to discuss today has a lot of that nuance. We have put together online learning material for teachers to teach on the basis of. And the core idea here is the notion of case studies. So 1Mby1M has always taught its curriculum in case studies. Our curriculum is entirely case study based, and we've had incredible access to case studies. So that sits at the heart of our ability to teach entrepreneurship by bringing in inputs and insights from very successful entrepreneurs from all over the world, discussing very candidly and very deeply how they put one foot before the other. So this is something in different parts of the world, you may not have access to this ability to bring these people into your classroom, but we are making that possible for you to do. So let's go over this. I'm going to read you pieces, and then we're going to discuss accordingly. Entrepreneurship is not a career. It is a way of life. For me, this journey began as a graduate student at MIT in 1994. The world watched Netscape go public that spring, and the internet swept over us like a virus. As I wrote my master's thesis, I also wrote my first business plan. We were, as a generation, shaping the internet during those early years, and my degree in hand, I was ready to jump into the unknown from then on. Really, I've been jumping into unknowns at every turn. Fortunately, I've had great mentors, people who took an interest in my destiny, stopped along the way, and taught me a thing or two. In turn, I have tried to stop along the way to pass on certain nuggets of my own learning. In the summer of 2006, as the technology industry resurfaced from the nuclear winter that followed the dot-com meltdown, I was invited to speak at a startup workshop. My session was supposed to focus on positioning. At a Silicon Valley law firm, some 60 entrepreneurs packed a conference room to listen to me. I asked each to pitch his business idea in 1 minute, following which I gave feedback for another minute or two. My 90-minute rapid-fire session, alas, was not enough to accommodate all the pitches. In the lobby, even as we spilled onto the front steps, I tried to respond to some more, but it was hardly satisfactory. In fact, it has always frustrated me to realize that I did not have enough time in my day to stop for each entrepreneur who asked for guidance. Friends, seasoned entrepreneurs, have expressed the same frustration. In 2006, I started capturing case studies of technology entrepreneurs and their journeys systematically. My thought then was that I have access to successful entrepreneurs. They're willing to share their journeys with me. Most first-time entrepreneurs around the world do not have such access. How can they learn from the masters? Over time, thousands of entrepreneurs have shared their journeys with me. This tribal knowledge has now been encapsulated in the 1M methodology and curriculum as case studies. Hundreds of entrepreneurs who have built billion-dollar unicorns, hundreds who have built venture-funded startups, and hundreds of entrepreneurs who have successfully bootstrapped their businesses are part of this comprehensive case study repository. You can easily simulate the experience of having lunch with Fred Luddy, who built ServiceNow to a unicorn, or with Sridhar Vembu, who bootstrapped his unicorn Zoho. Today, especially with the post-COVID shift to online learning en masse, we have the opportunity to equip teachers all over the world with these world-class case studies. Whether you are a professor in Madagascar or Macedonia, you can teach technology entrepreneurship with the same caliber of case studies and guest speakers as Stanford or MIT. A good chunk of the 1M curriculum is now available on Udemy at a very affordable price. We recommend that you group these courses into 4 parts or semesters: bootstrapping, how investors think, domain specialization, and startup ideation. In 1M, you will find a different take on incubation and acceleration than the fundraising-driven focus of Y Combinator Techstars or the vast majority of MBA programs out there. Our mission is to help democratize entrepreneurship education, incubation, acceleration by nurturing 1 million entrepreneurs globally to reach $1 million and beyond in annual revenue, thereby creating $1 trillion in global GDP and 10 million jobs. We believe entrepreneurship equals customers plus revenues plus profits. Financing is optional. Exit is optional. Our mantra is do not go to VCs as beggars, go as kings, bootstrap first, raise money later. Over 99% of the entrepreneurs who seek financing are rejected. Our methodology applies not only to the 1% venture fundable entrepreneurs, but also the other 99%. Folks, if you have any questions, please let us know. I will continue to the next segment, but you're very welcome to ask questions as we go along. So we're going to deal with bootstrapping first. In teaching the 1M methodology of building technology startups, we recommend that you start with bootstrapping. If you're teaching within a quarter or a semester system, an entire quarter or semester should be dedicated to driving home the importance and the mechanics of this critical subject. What is bootstrapping? Bootstrapping means building a business without external financing. This differs from businesses funded by investors. We need teachers of entrepreneurship to encourage entrepreneurs to focus on the fundamentals of their business first rather than raising money. De-glamorize funding, glamorize bootstrapping, and help correct the misconception that entrepreneurship equals financing. Paint a picture of the realities of an alternate, deeply satisfying universe where businesses are built by focusing on customers, revenues, and profits. That's what entrepreneurship is all about, and bootstrapping is the best way to start a business. In a world battered by economic uncertainty, entrepreneurship is the only sustainable path forward, and core to the success of these ventures is the art of bootstrapping. The key bootstrapping techniques and strategies that have been packaged into the following courses on Udemy, with numerous case studies to illustrate each point. Bootstrap first, raise money later with Shramana Mitra is the first course. Teach the importance of bootstrapping, key techniques, and how bootstrapping to a fundable stage can help gain attention from investors. Teach entrepreneurs not to waste their precious time and money by chasing investors before chasing customers. The waste stems from a widespread misunderstanding of how investors think. Over 99% of founders chase funding before they're fundable. Using this course, teach them how bootstrapping can help a startup reach that fundable stage. Once fundable, a startup can go to investors like a king, not a beggar. Next, bootstrapping a startup with a paycheck with Shramana Mitra. This is the Udemy course. Use this course to enlighten student entrepreneurs on the practicalities of starting a company while holding on to a full-time job. Introduce them to entrepreneurs who have built sizable businesses while navigating the messy, cash-strapped startup phases using their own paychecks or their spouse's income. Familiarize them with these pragmatic stories and dispel any doubts about starting a business while working full-time. Pragmatism is a core focus of the 1M methodology. Next, bootstrapping a startup with services with Shramana Mitra is the Udemy course. Offering a service is one of the best ways to bootstrap. This remains a controversial point of view. Most industry observers take the position that companies get distracted if they try to bootstrap a product with a service. But from where I sit, bootstrapping products with services is a tried and true method, especially in B2B tech. You find the case studies in this course and you learn from the masters. Then we have how to bootstrap startups by piggybacking with Shramana Mitra. Shed some light on platform as a service and developer ecosystems, one of the most exciting trends in the technology industry. The company that has knocked the ball out of the park with its PaaS strategy is Salesforce. They launched their platform in the mid-2000s, and many substantial companies and numerous sustainable small businesses have been built on it. Viva, for example, was built this way with a small amount of capital and boasts over $1 billion in revenue and over $20 billion in market cap. My hypothesis is that of the 200 plus SaaS companies that have achieved scale, we would see a set that would break out and become significant PaaS players. Bootstrapping by piggybacking on these PaaS players is a highly recommendable mechanism for a capital-efficient strategy. How to bootstrap a startup to exit with Shramana Mitra is the next course on Udemy. I'm a huge advocate for building small capital-efficient startups. Not all entrepreneurs need to chase unicorns. Not all investors need to chase unicorns. Point out that there are many more viable ideas for those smaller ventures, and there are considerably more opportunities for their exits, which means cashing in earlier on an entrepreneur's hard work. One type of exit is under $50 million, and to achieve that, the strategy should be to build a capital-efficient company that shows product market fit in an efficient, bootstrapped manner. How to succeed as a solo entrepreneur with Shramana Mitra is the next one. How does one teach how to succeed as a solo founder? It is actually quite simple. Guide your students to just find a niche, start solo, run lean, and get to product market fit and paying customers. That's the trick. Capital-efficient ventures remain the best way to build healthy, robust businesses for a large number of entrepreneurs. Illustrate this with the help of examples like ServiceNow, which was started solo by Fred Luddy. The company is public and worth over $125 billion. Let's talk about assessments. An entrepreneurship teacher prepares students for the real world. Use the case studies provided in the course to illustrate bootstrapping techniques. Discuss different scenarios and parts of the entrepreneurial journey and discuss what they have learned from each case study and how they plan to apply that wisdom. For papers, at the end of each of the 6 Udemy courses, have your students write a paper on a case study of their choice from that course. Grade them on the subtleties and the nuances of their understanding of the relevant issues. As a final project, group your students into teams and ask them to pick a particular case study from the curriculum and do a presentation on it. There are 6 specific courses tackling 6 specific topics. Split your class into 6 teams and have each team tackle one topic with one case study that they present and lead discussion on. Grade the teams on presentation. Now, estimated timeline, I think, your course should be split into 6 parts, right? So one part dedicated to each Udemy course. Roughly speaking, students should dedicate 15 to 20 hours per Udemy course, including studying the online lectures and text, in-class discussions, papers, presentations, etc. Now, what outcome should we aim for? at the end of your course, students should feel confident about starting a business and putting one foot before the other. Even if they do not go on to the other courses in your 4-part series, you have given them a life-changing experience. Even if they decide to become an entrepreneur in middle age later on in their lives, not immediately, they're likely to remember you and the sense of empowerment that you have equipped them to face life with. So that is the summary of the bootstrapping module. The next one we're going to talk about is how investors think. That is, in a 4-semester or 4-quarter story, this is going to be the second semester or second quarter course, how investors think. Considering how omnipresent the topic of fundraising is in the entrepreneurship media, it is entirely reasonable to dedicate a quarter or a semester to teaching how investors think. Raising funding for startups is a low probability game. Fewer than 1% who try actually succeed. Where startup ecosystems are immature, the probability gets even lower. The bar to raise seed funding is getting higher and higher. Seed investors are mostly operating as growth investors, expecting that the entrepreneur will somehow manage to bridge the gap and bring a concept to realization. In fact, what these investors really want is to invest in businesses that have traction, not just validation. In short, they want to come to the rescue of victory. Entrepreneurship teachers should teach their students how to go from concept to traction and how to bridge the seed capital gap. Try to communicate the negative impact of trying to raise funding when a business is not validated and has weak fundamentals. Stress on the importance of bootstrapping a business to validation before thinking about outside capital. Teach how investors at pre-seed, seed, post-seed stages think and what level they expect a business to be at. This will help startups attain that elusive holy grail of investor-entrepreneur fit and improve the chances of success in raising funds. Guide student entrepreneurs on when is the right time to raise money and how much they should raise. Help them understand the fundraising process and the early stage investment ecosystem. It consists of friends and family financing, pre-seed, seed, post-seed, pre-Series A, small Series A, and large Series A. We covered those stages in our Udemy courses 1 by 1. So these are the 3 Udemy courses that you should use to teach that section. How pre-seed investors think about startups with Shramana Mitra, how seed investors think about startups with Shramana Mitra, and post-seed and pre-Series A investors on startups with Shramana Mitra. For assessment, after a student goes through these 3 courses, assess them on the understanding of the early stage investor ecosystem. Offer case studies and scenarios and have students present how they would get such startups funded. In the next section of this course, How Investors Think, I would like you to deal with unicorns. Unicorns, as you can see, is constantly being discussed. It captures an inordinate amount of mind share. Unicorn is a startup with an estimated valuation of over $1 billion. More than 1,000 unicorns exist as of 2021. More are being hatched every month. Snowflake, Atlassian, ServiceNow are examples of startup unicorns. They're massive multi-billion-dollar publicly traded companies now. Yet they all started as an idea, took one step after another, and grew in size, and so on. That said, not every business idea can be scaled to a unicorn. The billion-dollar question is, what are the characteristics of the opportunities that have the potential to scale to a unicorn startup? We discussed the topic with a number of entrepreneurs who have succeeded in building their own unicorns. And this course synthesizes those inspiring conversations. A vast majority of venture capitalists are chasing unicorns. It is extremely important to understand the dynamics of what makes a unicorn trajectory, 0 to 100 million in revenue in 5 to 7 years, and how investors assess such potential. So teach our unicorn case studies with this Udemy course, How to Build Unicorn Tech Startups with Romana Mitra. As a counterpoint, we also want you to teach funding niche businesses. And there is a Udemy course, Alternatives to Unicorn Chasing Investors with Romana Mitra. I've interviewed hundreds of investors, especially micro VCs and angels who are playing in the early stage startup game. As I expected, a large number of investors are still chasing unicorns. However, I'm pleased to report that I've spoken with a number of investors who recognize the niche opportunities. They are interested in investing small amounts and harvesting through smaller exits. This is an important nuance to teach through our dedicated Udemy course, Alternatives to Unicorn Chasing Investors with Romana Mitra. Drive home the importance of investor-entrepreneur fit. In the next semester, we will cover case studies specific to a domain or a region, and the following courses cover the investor perspective on some of those. Cover the investor perspective in this course and the entrepreneur perspective in the next one. So in this one, you should do how seed investors think about deep tech with Romana Mitra. There's a lot of deep tech entrepreneurship and funding going on, so you need to understand that. How women investors think about startups with Romana Mitra, how investors think about startups in India with Romana Mitra, how investors think about European startups with Romana Mitra, how investors think of startups in Latin America with Romana Mitra, and how investors think about startups in the Midwest with Romana Mitra. That this is kind of like the kind of driving towards investor-entrepreneur fit and understanding the nuances of how different types of entrepreneurs are thinking about investment. And finally, the last course that I would point you to is VC due diligence questions for startups with Romana Mitra. VCs use specific questions for due diligence, and this course goes over the questions that they ask. So I think if you covered this material, you have more or less given your students a good overview of the topic of venture capital. In terms of assessment, using the case studies, create scenarios using dummy companies and financials. Test which path would the student take, VC funding or bootstrapping, or what kind of investors would they approach, etc. Estimated timeline, this course should be split into 5 parts as outlined. Roughly speaking, students should dedicate 20 hours per part, including studying the online lectures and texts, in-class discussions, papers, and presentations. In terms of outcome, at the end of your course, students should know that they need to be fundable before going out to raise money, and that not all businesses warrant venture financing. They should also have developed a keen sense of investor-entrepreneur fit. Okay, so that is the second semester or quarter of the course that you're going to be teaching. The third semester or quarter is about domain specialization. Every student is different, every entrepreneur is different, every sector is different. It is important to study domain-specific case studies to validate a concept, discover product market fit, and learn about various forms of startup funding. Based on your students' interest, point them to the right resources that can help them understand the domain's opportunities and pitfalls. Our courses consist of in-depth interviews with the startup founders who have successfully built ventures in healthcare, e-commerce, artificial intelligence, online education, cloud computing, or SaaS, and so forth. It is very helpful to trace how they gained traction, created market entry strategies, positioned their products, and so on. If your students study them carefully, they'll be several steps ahead of the competition. Thus, the third quarter or semester of our curriculum is to delve deep into domain-specific case studies. How to build e-commerce startups with Shramana Mitra is a very comprehensive course. E-commerce is a very interesting category, very important category. A tremendous amount of e-commerce entrepreneurship is happening, will continue to happen, so it's a very important domain to cover. Another one is how to build two-sided e-commerce marketplaces, a very interesting domain. How to build AI startups with Shramana Mitra is one really relevant because AI entrepreneurship is happening in bulk right now. How to build online education startups with Shramana Mitra, how to build digital health startups with Shramana Mitra. These are all great courses to include in this section. After this, in the third semester, you also should cover geography-specific case studies. The region a business is located in plays a vital role in the market dynamics. The market for a business might be saturated in one region, but could have white space in another. Concept arbitrage is a common tactic in finding business ideas. So this course not only provides insights into the challenges and opportunities in a region, but it could also be a goldmine of ideas for businesses. So in India, we have thousands of entrepreneurs, and many more Indians are starting their own businesses as we speak. Even with mistakes, disappointments, setbacks, all things considered, startup founders continue to want to realize their ambitions no matter what. India's greatest achievement in the last decade has been the consistent unleashing of the entrepreneurial movement. The risk tolerance of the Indian population has increased. No longer is it the holy grail to lust after fat salaries at multinationals. The dream of building something of your own seduces people in India, even if that implies a built-in risk of failure. The following course has some inspiring examples of successes, both big and small, during the early stages of their journeys. Entrepreneurship case studies from India with Shramana Mitra is the Udemy course you want to use for this. Use this course to teach students about some of the biggest entrepreneurship success stories out of India, how they got their start through in-depth conversations with several of India's most successful founders. Also, discuss the little-known success stories and what they can learn from those too. I've included both in the course. The Latin America startup movement has accelerated recently. We're seeing lots of e-commerce in various domains, of course, but also fintech, ag tech, even B2B SaaS. One of the first major Latin American successes was Mercado Libre out of Argentina, which went public on New York Stock Exchange in 2007. In fact, I worked with Mercado Libre early on and got to know a lot about the company's thought process as they developed their strategy for dominating the content e-commerce trend. As other countries have figured out, if someone is trying to build a global B2B tech company, typically these days a SaaS venture, they need to access the US market relatively early in their progression. They can validate their local market, get some customers going, but quickly start the process of penetrating the US customer base. Now, e-commerce or fintech are very different animals. These startups tend to be much more local businesses. One can build a very large e-commerce or fintech business without ever leaving Brazil or Argentina, Mexico, or Colombia. The following course features conversations with several Latin American successful entrepreneurs, as well as lessons learned and their best advice. How to build tech startups in Latin America with Shramana Mitra. That's your next Udemy course to cover. And in Europe, my hypothesis is that Europe continues to be a mecca of culture, and there is adequate technical expertise on that continent to come up with more significant concepts that may become drivers of major trends. The role I see for Europe is in reaching out to the rest of the world and taking a leadership stance in developing taste. Whether it is educating the Chinese market about French and Italian wines, or packaging culture for the consumption of Silicon Valley geeks, there is a European Renaissance possible. But it will likely not be one concentrated in Paris or Florence. Rather, it will be an international Renaissance whereby Europe exports its strength in culture, preservation, cuisine, and style to a world growing in wealth and sophistication. The advantages of that kind of wide-ranging taste-making will benefit Europe both on its own soil and throughout the world, and it will help to promote economic growth across all European countries. In pure tech, also, Europe is making great strides in building global ventures. The number of tech unicorns is growing steadily. The following course features conversations about several successful European entrepreneurs as well as lessons learned from their best advice, and it spans all these different kinds of entrepreneurship. The courses, the Udemy courses, use entrepreneurship case studies from Europe with Romana Mitra. I've also given you one optional course in this semester. If your students are largely from non-technical backgrounds, you may also consider the following course to encourage them. It's How Non-Technical Founders Build Startups with Romana Mitra on Udemy. There are a lot of places where there are a lot of non-technical founders trying to figure out how to build technical companies. It's an important course, optional but important. Assessment. A great assessment is to have each student pick a case study and evaluate if a concept arbitrage is possible in your region. For example, if you're teaching this course in Ghana, have your students each pick a concept and analyze if there is enough white space to replicate that business in Ghana. If the analysis yields the conclusion that the market is already saturated, that is fine too. The important exercise is to learn how to assess. In that process, also, students can explore how they would do things differently and why. A tool for assessment is this Udemy course, VC Due Diligence Questions for Startups with Romana Mitra. Estimated timeline. Your course should be split into 3 parts: domain-specific case studies, geography-specific case studies, and a case study project. Roughly speaking, students should dedicate 50 hours on the first part, 20 hours on the second part, and another 50 hours on the third part. This includes studying the online lectures, texts, in-class discussions, project work, papers, and presentations. And as outcome, at the end of your course, students should have a sense of multiple tech startup domains and an idea about how to find gaps in the market to position a new idea. All right. Any questions, folks? Abhijit says, today's session is very informative. Thank you, ma'am. Sure. So we have a little bit more material to cover, which is the 4th semester course on startup ideation. Teachers need to inspire their students to ideate, guide them on how to evaluate their ideas, and make sure they're viable and scalable. Entrepreneurs often come up with 10 different ideas and have to sift through them to decide which one to pursue. How does one prioritize their best startup ideas? What are their most innovative startup ideas? Which of their business ideas may be fundable? The entrepreneurship universe is littered with startup failures. Startup success often hinges upon the ability to come up with a viable startup idea. Students will often ask you if there is a strategy that can be followed for the idea stage. Yes, there is a strategy. Firstly, one has to develop an understanding of the domain in which they want to build a startup. It is important to learn about the hot domains within which a lot of startup activity is happening right now. They need to understand the dynamics of each, find a gap in the market, and position a startup idea as a solution accordingly. We started this domain-specific knowledge-building exercise in the previous quarter or semester. Secondly, they need to master the ideation process itself. For this, we start the fourth quarter or semester of this series with the Udemy course, Startup Ideas for the Post-COVID World with Romana Mitra. The COVID-19 pandemic has changed consumer behavior in a major way. As we move through the virus era, much more will likely change. With this realization, we ran a poll in June 2020, asking which topics readers would like me to cover and discuss. The overwhelming winner was startup ideas. This course covers in detail 8 of my startup ideas that you can use as case studies to teach your students the ideation process. K through 12 education. In the post-COVID world, a new learning paradigm needs to emerge. Here, I detail a unicorn idea that can attract venture capital. It's a case study. You can teach this case study just to proxy the ideation process. And I'll take you through about 8 of these case studies. The second one is meaningful friendship through literature and film. My own literary group, like many others, has had to go virtual and operate through a video conferencing platform in the wake of the COVID menace. The startup idea outlined here is born out of this experience and with an eye on the isolation that humanity is facing in the post-COVID world. Distributing the workforce. One of the unambiguous trends of the COVID era is the success of work from home for certain industry sectors such as tech, finance, legal, consulting, etc. The unicorn startup idea outlined here involves managing this transition and its associated nuances. The next one is facilitating travel experiences. There are 2 major trends that the world will need to take in stride in the COVID era. Air travel will become expensive and people will be working remotely. The startup idea addressing these trends, as explained here, could be a 5 to 10 billion market cap company, a unicorn. The next one is artists and collectors shift online. As you may know, I have a special interest in art and have observed its dynamics for many years. I have concluded that the time has come for artists and collectors to move online and interact in a fluid marketplace. The idea that I discuss here is a unicorn idea with the potential to become a highly valued company that would achieve a $1 billion plus valuation. The next one is home-based healthcare. Certain sectors of industry are facing extraordinary levels of job loss in the post-COVID era. While some of these jobs may come back, it is widely believed that some trends are permanent. The retail sector faces one of the greatest shifts. The move to online shopping seems irreversible. The startup idea detailed here facilitates the retraining of service sector employees as healthcare professionals. Restaurants delivering prepared food as a subscription is the 7th idea. In the COVID era, people have been forced to cook a lot more than they were used to. Some have embraced home cooking, others have found it to be a burden. On the other hand, restaurants are facing an existential moment, gasping for survival. I believe for a certain segment of the population, a subscription service to a set of restaurants would work really well, and share my vision for this startup here. And the last one in this case study series is managing philanthropy. In a world economy devastated by COVID, threatened by climate change, ravaged by simultaneous natural disasters, the need for philanthropy has never been higher. The startup idea shared here is a philanthropy management software solution, software as a service, that would be sold to banks with wealth management practices. And finally, whenever I evaluate a tech startup idea, I always do VC-style due diligence on it. This course goes over the specifics of my analysis process that should be used to analyze a startup idea before writing a single line of code. And that is BC Due Diligence Questions for Startups with Romana Mitra from Udemy. You should already have this course by now. Assessment. This one is a more of a practical hands-on course where the students bring together the previous 3 quarters or semesters of learning and work on a startup idea of their own. They can do so in teams. The teacher should have enough knowledge of the 1M by 1M case studies to be able to point students to comparables and blueprints that they can draw lessons from. In parallel, the class should attend my free 1M by 1M pitch roundtables that is held every week on Thursdays. The class should be structured around and graded based on 4 rounds of pitch sessions. The first one is concept pitches and instructor plus peer feedback. The second one is bootstrapping strategy pitches and instructor plus peer feedback. The third one is go-to-market strategy pitches and instructor and peer feedback. And the final one is financing strategy pitches and instructor and peer feedback. You need to assess their understanding of the ideation, bootstrapping, fundraising, and go-to-market processes by asking them to replicate a pitching session where they will pitch an idea and also evaluate their peers' ideas. Grade them on both their own pitches as well as how they are interacting with other pitches. Estimated timeline is based on the fact that your course should be split into 2 parts, the methodology and the practice. As I said, this is a practical course. Roughly speaking, students should dedicate 20 hours to methodology and 100 hours to developing the project. This includes studying the online lectures and texts, in-class discussions, project work, papers, and presentations. And the outcome at the end of your course should be that the students would have a sense of how to come up with a new business idea, develop strategy for it, and how to pitch it. So that is the last of the 4-course series. If anyone has any questions, please feel free to ask. I will quickly summarize the courses with a conclusion. I strongly believe that entrepreneurship and entrepreneurial capitalism can be democratized, and wealth can be created in the middle of the pyramid using capitalistic principles. In the next 2 to 3 decades, the potential for distributed capitalism is very high, and the outcome should be extremely positive around the world. That is the mission upon which my current work with 1Mby1M is based. The 1Mby1M curriculum is predicated upon a philosophy of bootstrapped, capital-efficient entrepreneurship, precise positioning, efficient go-to-market strategy, and aligns with the trends of the present day. It follows a methodology that addresses many of the common fallacies, the primary one being that entrepreneurship equals fundraising. No, entrepreneurship equals customers, revenues, and profits. Fundraising is an optional tool and can be powerful if you know how and when to use it. The curriculum is a combination of video lectures and case studies, and we have the absolute best repository of case studies for early-stage entrepreneurship anywhere in the world. Harvard, Stanford, MIT, nowhere would you find such a collection of case studies because no one else has focused so intensely and precisely on the very early stages of business building we have. At 1M we teach how to be a sophisticated entrepreneur, not a simplistic one who runs after investors all the time. We teach how to create value and valuation, how to preserve ownership, and many other critical topics. Most importantly, you have the benefit of several hundred successful entrepreneurs, luminaries in their fields, sharing with you their lessons from the trenches through our case studies. By taking those courses, you can gain instructive perspectives on how to build a thriving IT business methodically, step by step, instead of guessing. Our philosophy of democratization includes making it affordable for millions of students all over the world to access the methodology and the curriculum. Our Udemy courses are priced at $39.99 to $89.99. Udemy offers steep discounts regularly, and with a bit of strategic monitoring, the courses can be acquired for $10 to $15. This, we believe, is rock bottom pricing, and it puts the 4-semester program suggested here at number 1, Bootstrapping, 6 courses, 6 Udemy courses, that's about $60 to $90. How Investors Think is the second one, 11 courses, about $110 to $165. Domain Specialization, 8 courses, about $80 to $120. And Startup Ideation, just 1 course, $10 to $15. All told, to teach the 1M by 1M methodology, your students need to spend about $250 to $500 in acquiring our Udemy courses. The 4 quarters of semesters worth of courses in total constitute about 500 hours of intensive learning. We're looking for thousands of instructors in every corner of the world who want to teach this methodology to aspiring entrepreneurs. Together, we can make a material impact on the world economy. We look forward to working with you. To continue the conversation, please join the 1M Ambassador group on LinkedIn, where we will be offering more support and an opportunity to network around these ideas. All right, that is a summary of how to teach technology entrepreneurship using the 1M methodology and case studies. So that is all. If you like what we're doing in 1M, please refer serious entrepreneurs here. All resources are at 1M1M.com. You can start with the blog, which is free. The Entrepreneur Journeys book series is very affordably priced and available on Amazon. These roundtables, these free roundtables happen every week. You can attend as many as you like. The full premium program is our full acceleration program. You're very welcome to join. The self-assessment is available. Those are the due diligence questions that VCs use. Our free bootstrapping course is available on the blog. It's about a less than 1 hour course, which will take you through the highlights of our bootstrapping philosophy. The Udemy courses I've talked about at length. You can go to the blog and find the entire list of the Udemy courses. This is the link. And the 1M Basic is our entire curriculum, and that is also available for subscription at $99 per month. That's it. Dig around on the website. You will find lots of material and decide whether this is the program for you or not. And if you need investor introductions, go to the investor introduction section of the website and understand how we do that. As I said, don't go to investors as beggars, go as kings. And that is all. We have 3 more roundtables left this year in December. No roundtable next week, it's Thanksgiving. And that is it. If anybody wants to talk, please let us know. Otherwise, we're going to adjourn soon. If you have questions about the program, Irina Patterson is your contact. Anybody? Quick question? All right, folks, I am going to adjourn today, and we will see you next time. Bye.